All right, thank you. Okay, so thank you all for coming for this session. Today we'll be talking about money habits, and we have Toyin with us. I'm just going to, just give me a minute. I already had this open before. All right, thank you. So Toyin Fatubarin is a Nigerian living in Canada since 2016. She's a project manager by profession and has worked in PM and tech since 2009. And she's currently the director project management office at an IT managed service firm. And one of her passions is seeing fellow immigrants, immigrant professionals especially, thrive in their new country. She enjoys quality info. She enjoys sharing quality info with immigrants, and she comes in contact with, and also through our IG page and podcast, which is Thriving as a Canadian Immigrant. And then just before I give the floor to Tony to talk to us about money habits, I just want to just set some ground rules. We would appreciate if you can mute yourselves before she starts, because this session is currently recorded, and then it would, at the end of the session, I would I'll send the recording to the group, and then we'll also put it up on YouTube for anybody that wants to watch or rewatch this session. And also, next thing I was going to talk about is Anu sent an email for people living in Ontario, about the lockdown. If it's just we just have a group, a mini community group on WhatsApp, just to encourage each other. And then if there's something you need, please do not hesitate to click the link to join the group, and then just let us know. We will try as much as we can, or we try our best to come through for you, especially in this, difficult time. And then also the last thing is our CSR. The CSR community will be communicating their CSR initiative in 2 weeks. So, and I'm talking about the finance group for North America. And for North America, that's our Arimathea group. So they'll be communicating to us their initiative to us in 2 weeks. So please just keep those things at the back of your mind. So without further ado, I would just like to give the floor to Toyin, because already time is far spent. And then how she wants it is that she's going to do a presentation, 30 to 45 minutes, and then thereafter we can ask our questions afterwards. So Toyin, thank you very much, and you have the floor.
Thank you very much, Yomi, and good afternoon, good evening, good morning, depending on where you're joining from. But I understand that most people are joining from North America. And if you don't mind, if you have access to your chat, just drop a message in your chat to let us know where you're joining from. Let me know, because I'm sure most of you are familiar with yourselves already. But if you're able to drop where you're joining from in the chat, that'll be awesome. So I know where everyone is joining from this afternoon. Thank you. I see Makam. Thanks, everyone. I'm just going to share my screen here while we're doing that. Is everybody able to see my screen?
Yes, we can.
Okay, perfect. So thanks, Yomi and Tolu. Thank you again for inviting me to have this conversation with your group. My name is Toyin, and Yomi has done much of the introduction, so I won't be going into that. I would like us to go right into the presentation so we can get as much information as we can for this duration of the time. I moved to Canada in 2016, and from that time till now, I've been able to gather some information, which I enjoy sharing, right? Depending on who I'm talking to, I enjoy passing on that knowledge to, so that people can learn, and I can also learn from you, you can learn from me. So today I'll be talking on good money habits with focus on credit as it relates to living in North America. And first of all, do we think credit card is good? So drop your answers as well in the chat. What do you think about credit? Do you think it's good? Do you think it's bad? What's your thought? Is it neither good nor bad? What do you think about credit? I see someone saying good and bad. It depends. Good if managed well. I'm waiting for more answers. Credit sweet. Somebody said it's debt. It's busy. It's good to build credit and get points for food and shopping. Someone said, I think it's unnecessary. Stay away from credit cards. Okay. I'm waiting for more. Keep them coming. I'll check. Depends on how you use it. Interesting. Okay. All right, let's move on. And I'll go on now to what is a credit score. So credit, some people think it's good. Some people think it's bad, but we'll find out as we continue in this presentation, we'll find out whether or not we should be using credit, how we can use credit, if it's good, if it's bad. We'll get more of those answers as we go. So what is a credit score? First of all, it's a 3-digit number, right? And it ranges from like 300 to 900. The higher that number, the better it is for you. When that number is low, then it sends a signal to lenders that, you know, you're a very risky person. They shouldn't even be giving you money at all in the first place. And when you're new to Canada, you don't have a credit history per se. They don't know you. They don't even know where to place you. So whatever you do from that point onwards just starts to define you in a certain way to whoever wants to lend you money, right? So to your banks, to credit unions, your habits from there on start to shape, you know, how you're viewed, whether you're a credible person when it comes to money habits or not, right? Okay. So in Canada here, I'll be speaking more because that's where I live. So I understand there are people from probably the US as well, but many of these things are similar when it comes to like credit in general, but we focus on Canada because that's where I live. So I have more information on that side. So in Canada, we have like 2 major agencies that handle credit. So we have Equifax and we have TransUnion, right? Those are the 2 reporting agencies. And how is the credit score? What does it look like, right? Where does it start from? Where does it end? So we have like 300 to 559, which is like poor, like really poor, right? And then it goes on to like 560 to 659, which is fair. And then we have 660 to 724, which is good, right? So if you think about being anywhere at all, like you're starting to build out your credits, where you want to be is you want to start from good, right? And then start getting to very good and then excellent. So when you start hitting like 750 and upward, then your credit is considered great, right? And then many people think, why do I even need credit at all? Like most of us, many of us, I would assume, are coming from probably Nigeria or, you know, somewhere, maybe you're not so familiar with how credit is used and how you can use credit to your advantage, right? So in Nigeria, typically you just think credit is basic. Don't even go there. Like it's debt. I don't want to even put my hands into what I cannot, you know, handle, right? But then you're living in a country where you cannot run away from it, right? You're living in the system. So the more knowledge you know about it, the better it is for you. It's better not to be ignorant. It's better to be informed. Whether you will use it and how you will use it then starts to build on that knowledge that you even get in the first place, right? But choosing not to even hear about it, like blocking your ears to it is not good, right? So let's talk about it. Why do you need credit? When you start out, you're someone that is maybe 0 credit history. You don't have any credit, right? And assuming you want to buy a house and that house is costing like $350,000 or $400,000. So now we're not talking about credit that you just take to Walmart or to Superstore and you're using your credit card to buy something. Now we're talking about real credit, like you need credit to build equity, right? And then put a down payment down, start paying your mortgage and paying your mortgage responsibly, right? So imagine walking up to a bank and then they pull up your report and there's like, they just see very poor credit score. So automatically the lender doesn't want to give you that money. If they give you that money, they are not giving you at the same rate that they will give it to someone that has an excellent credit score, because you're more of a risky person in their eyes, right? And that's why it's always good to build that score before you need it, right? So you don't want to keep carrying a zero credit history or no credit history, and you need something to do that is sensible, and you're going to be paying your mortgage responsibly, and you realize that, oh, this is what I should have been doing a long time ago, right? So credit is not bad as long as you manage your credit responsibly. Credit is not bad. It's something that we need in this system that we live in, right? So most people, like some people may have 500K at their disposal. I don't know how many of such people are here. If you're one of them, please, maybe you and I can be friends right after this presentation. But most people actually don't have 500K to pay, as like they pay off their house at once, right? Many people have maybe like 50K, 10%, 20% down payments, and then they want to continue to pay. So that's why you really, really need your credit. Even before you get to things like house, maybe you want to get a car and you want to get the car on loan, right? You need to have a good credit. So you're getting a good interest rate, right? And nobody looks at you like, oh, this person is no history. I don't even know where to place this person. Yeah, so what types of credit do we have? When many people hear credit, they hear credit cards, right? And that's not all there is to credit, because there are different types of credit. We have revolving accounts, which are the ones that many people know as credit. And that's your credit card. That's where it falls in, right? So typically you have a payment each month, and then the payments may not be the same, right? Depending on how much you use that card, what you put on that card, right? You could go to a furniture store and buy furniture for like 2K, or you go to Walmart and do your grocery and you put it on your credit card, right? So that's what we call revolving accounts. And then we move on to installment accounts, which are like your mortgage or your student loans, right? So mortgage, probably bi-weekly, maybe you're paying 500 or 1,000 bi-weekly on your mortgage, and it's a fixed amount, right? So those are like installment accounts where every 2 weeks they take that money out of your account, right? And then we have open accounts, which are like utility bills, right? So you use those type of services upfront, but you owe the electric company, right? They've already offered you the service, right? But you need to pay them back in full, actually. You cannot say, oh, call them up, like I used up $70 of electricity bill and I want to pay 20. So you actually need to pay completely, right, on that bill. So those are the types of credit, and all these three types actually count against your score. So it's not just your credit card that counts against your score. Like if you carry any of these three types of credit, it actually counts against your score. Counts against or for, let me say it that way. So I don't want to say it as though it's negative, right? Depending on how you use it, it could be positive or negative. And then we move on to who assigns my score. So how do they even come up with this score at all in the first place, right? So those two credit bureaus that I mentioned at the beginning, they collect your information from different sources. Your bank, if you have a car loan, like an auto lender, they get information from them. If you have your phone, like your cell phone charges, they get those type of information. Maybe Shaw or Bell in Canada here is providing services to you. They get information from them too, right? And then collection agencies. Collection agencies, imagine you, like somebody doesn't pay up on time and that record is sent to a collection agency, it starts to impact the person's score. So the information is gathered from different sources and all of that translates into your credit score, right? And typically, like whatever report they get stays on your credit report for like 6 to 7 years. It varies depending on what part of Canada, or province or territory you live in, but those reports actually stay, like those activities remain on your on your report for like 7 years. That's why it's always good to try to manage it effectively so that if it's positive, it stays there. If it's negative, you don't want it to even get there at all because it sticks for a long time, right? And then how is the credit score calculated? So we've heard about the types, we've heard about the score ranges. Now, how is it even calculated at all, right? So people think that it's just, oh, maybe my payments history, but it's actually a breakdown of all these different points here, like the payment history, the amount you owe, the length of the credit history, the types, which we just talked about when we mentioned revolving, and then whether or not you have application for like a new credit, right? So the bureaus themselves, there's like a proprietary secret model where how they actually compile all of it, but typically it follows this breakdown, right? And then the information, like I mentioned, varies and stays on your report for like 6 or 7 years, depending on where you're living, but it generally remains for like that length of time. So when we look at payment history talks about, you know, how often does this person use the credit? How quickly do they pay off that credit, right? So all of that information is gathered and farmed across the board, right? So you don't want a negative one to stay there because that history gets carried on from time to time, right? And then amount that you owe. So if I have $1,000 on my credit card that is available to me, right? And remember, it is not free money. So $1,000 is available to me. And then on that 1,000, I go shopping for different things like what I need at home, clothing, furniture. And then maybe from that 1,000, I just spent like 500, right? So that record shows if you carry large balances as well, it shows, especially those types of balances that are close to your limits, those are the ones that start to impact your score in a negative way. And that's what you don't want, right? And then the length of the credit history. So if you have like a credit card that probably when you landed to Canada, maybe 10 years ago, or when you started living in America 5 years ago, you got your first credit card, right? So that credit, if that credit card you've been using it well, you haven't been owing too much, you've been paying up on time and you've been paying in full, it's good to always retain those type of cards. Like you don't go canceling such accounts because those accounts show that you have a good history across board, right? So the length and how long you carry those types of cards is very important. Like if I opened an account when I landed and I haven't messed up that account, I've been using that credit responsibly, I want to retain those accounts, right? So if you want to cancel accounts, those are the types of accounts that you should not be thinking about canceling because they hold the longest credit record, and that also counts against your score, right? And then the types of credit which we covered, and then new credit. So some people don't know that when you ask for, like if you're asking for different credit cards from like different companies or different banks, it shows that it makes you look as though you're desperate, right? And then what are you trying to get that money for in the first place? Like, why are you going around? Is this person in a crunch? So it just makes those guys start to think about like, maybe this person is going to take this money and start to act very responsible.
Basically bootstrap.
So they start to think maybe this person is going to take money and be very irresponsible with the money, right? So your new credit request, when it's like credit cards or car or mortgage, when you do those types of applications for credit, it's called a hard hit on your credit report, right? And then the number of hard hits you get can negatively impact your score as well. But when you're doing like a credit check, which is a soft check on your own, you're probably checking on your banking application, and then you see that you have a score of like 800, that doesn't impact your score. But when you're making a new credit application, it actually impacts your score. And you see it in your report. Like if you ask for a credit report, you see it on your report as credit inquiries, right? So those inquiries also stay for like 6 or 7 years, right? Is when you needed it, you went to ask, right? So when you're shopping for a house or you're shopping for a car, and then you go to the auto lender or you go to them, like your bank or your credit union to ask for a mortgage, it's better to do it within the space of like 2 weeks. If you're shopping around, right, you want to know who's going to give you the best rate for your house. It's better to do it within the space of like 2 weeks so that it shows up on the report that you're shopping for a particular objective, right? But when you're going around, even after 2 weeks, a month, you're just asking around, like, I need a card, I want to get a house, and you're just doing this shopping erratically, asking for credit, it shows up as a hard hit and is not beneficial to you or to your score. And this is exactly what I was talking about. Like, you need to limit the amount of times that you apply for credit, because those applications also impact your score. So too many checks can indeed hurt your score. And that's what everyone needs to keep in mind. Like, your inquiries can be combined as a single inquiry, as long as you do it within a 2 weeks period. You go to different lenders. But when you're going to lenders just like a month, and then the next month you're asking another lender, it doesn't help your score at all. And those are called hard hits again. And now onto this slide, which is how to build and maintain a great score. So how then do we build a great score? We know that we want to be in the range of like 750 upwards, 800, fantastic. When we're 850, we're almost there, which is 900 is like great, awesome, best score, right? So how do we even get from 750 to 800 and stay there, right? So when you get a credit, when you get your bank statement and then it shows you how much you're owing as regards credit, you want to pay off on time and try to pay off in full, right? So, and that's not to say that if you don't pay off in full, you cannot maintain a good score. You can actually maintain a good score if you don't pay off in full, as long as you're paying what you carry on your balance, right? You can still maintain a good score. But what that tells you is that you'll be paying interest to the bank, which you don't want, right? So if you can pay on time and pay in full, make sure you do that. And try not to spend more than what you already have, right? So the purpose of having a credit card in the first place and using credit is to build that great score. So if I know that on my credit card, I have a limit of like 2,500, and then in my debit account, I also have 2,000, right? And I go to do groceries, I go to do shopping. I want to be able to, I know that I have that money, right? I'm only using the credit card for the purpose of building my score. So by the time my statement comes in and I've seen that I've used 500 out of the 2K, I'm paying it back and I'm paying all the 500, right? It's not as though I'm paying the minimum amount that the bank says I can pay, which is probably like $10. Because when you pay the $10, and then your cycle for that month is over, it means that you're paying the bank like 22% interest on that money that you didn't pay completely. So you want to strive to pay, like just use what you know that you have, and then you use it to build a good record or history and pay it off back, right? As soon as your statement comes in. Right. Another piece is credit utilization. So many people wonder, oh, if I have 1,000, can I just use up the 1,000 and then pay the 1,000 back? That's a huge no-no, right? So there is that model where I showed you how credit is calculated. There's the amount you use, which is your utilization. And you want that utilization to typically stay lower than, like preferably, let it be at 10%, nothing higher, right? And then if you have 2,000 and you use 10%, which is like 200, pay your 10% back. If you see that you go out shopping and you've used 500, that's already over 10%. Now you're approaching like 20%, 25%, right? And that just shows that, oh, probably you need the credit. You don't have that money, you're probably at a crunch, and then you're using up more, like you're utilizing more of the credit, right? So 10K and you've utilized 50%, which is like 5K. And you have it, you pay it, but unbeknownst to you, right, you're actually impacting your score when you use up way more than your credit. So it's actually like a balance, like you have to balance it out. Use like 10%, pay back your 10%. When you use way more than that, try to pay it back in a relatively short time and bring your utilization back to 10%, right? And the reason for that is it shows that you're using that credit. You don't need too much of the credit, and you're paying back in good record time how much of that credit that you used, right? Another thing to remember is you don't apply for too many credit cards. And I touched on that in a previous slide. Don't apply for too many credit cards at once. If you have one credit card that probably gives you points when you fill up gas or you go grocery shopping, keep that one. And then maybe there's another one that you use for your travel, and then you gather points when you travel, keep that one as well. But you don't want to have like so many credit cards and they're wondering why you have so many revolving credits. You have your open accounts, which you need, right? And then you have the one that you use for utility. So credit cards per se, you don't need too much of them, Like you just need, even if you have one or two, it's fine, as long as you're paying back in good record time. And then I also mentioned keep your oldest account active, right? Because that carries like length of how well you've been using credit. And you also want to try to get a higher limit. So when you first move to Canada, for example, they offer you like credit limit of like 1,005 or 2,000. And then maybe one day your account officer calls you and says, oh, like they look at your history, there's salary every 2 weeks, and then there's money sitting in your account. So they think, oh, this person is a very responsible person. And they say, we want to offer you 10K or 5K credit limits. And you'd be like, no, I don't want basically, just take your money. Don't give me higher credit limit. In actual fact, you can actually take the higher credit limit, because the higher credit limit, when it comes to your utilization again, if you had 10K and you're using $100, you're using 1,000, there's no way that is even getting close to 10% of your utilization. So the higher the limit you have, the better it is for you, right? So imagine if I have a limit of like 25K in my account and I'm using maybe just like 2,500 or 2,000, there's no way I'm getting close to 10% and I'm paying my credit back in full. It's awesome. It's amazing, right? It doesn't even show that I'm using so much on my credit. As long as I'm using some amount that is lower than 10%, then I'm in a good place, right? And you also want to do your research. Many people say, as soon as I'm back home from shopping, I'm paying it immediately. I don't want any problem. What that does is it doesn't show that, it doesn't stay on your record at all, because when the credit bureau's report is pulled from all your different lenders, you have cleared everything. Like you're clearing, immediately you're using the credit, you're clearing. So it's almost as though you have a zero history, right? So you want to carry it for, when your report comes in, is a good time to pay off. Like as soon as you get your credit report, and remember, as long as your utilization is not too high. If your utilization is really high, pay it back so that when that report is sent to the bureau, because you don't know when it will be sent, right? So it's probably like a cycle of 28 days. And within that 28 days, I've gone shopping, I've gone higher than 10%, pay it back immediately so that keep it below 10%. When that report is sent to them, all they are seeing is like 10% utilization, 10% utilization, instead of over 30 or zero utilization, right? So to build your score, these are the types of things you want to keep in mind when you're using your credit. And then I also wanted to touch on a few other items here. I'm hearing myself.
Please, can we mute ourselves?
Can you hear me? Okay, perfect.
Yes.
All right, so I also want to touch on some other items, some other good tips which are available to us. And that's speaking of like RRSP, which is like your retirement savings here in Canada. We also have RESP, which is like if you have children, that's like your education savings plan for children. You also have things like your employment benefits, right? So it's not all about salary. Your employer could be paying for your phone. Like they could give you a phone and be paying your phone bills. Your employer, if you work from home, they may decide to be paying your internet bills. So there's just a range of other benefits that are available to you. And then you need to look beyond your salary. So when it comes to RRSP, some employers here in Canada, when you pay up like $100, you add that to your RRSP account, they may also match it for you, like to a certain percentage. So that's what some people are not aware of, and then they don't take advantage of that. But when you take advantage of that, even when you leave that employment for like 401k, as it's called, thank you, Alita, as it's called in the US, right? So when you take advantage of those things, it's building up your money for you, right? It's building up wealth for you, which is what you want, right? So imagine you don't even take advantage of your matching program, and then you leave that employment after 2 years. You don't know, you could have possibly saved like 10K just by being involved in that matching program with your employer, right? So when you go for an interview or you're seeking employment, try to, if you have 2 offers, which happens in some cases, not too many cases, like some people are trying their best to even find one, but assuming you by God's grace or something happens and then you have 2 offers at hand, try to compare those 2, like what does this employer offer me that this person doesn't offer me, so that you don't, like, you're not leaving money on the table, right? So I just wanted to cover that briefly, and it's outside of your credit and it's outside of building a credit score, but those are some of the things that we should be aware of. There's also, and I'm about rounding up, but I wanted to touch on a few different things. There's also the bit on, hold on, like this, 1 second. Are you able to see the current slide? Yomi, can you see it?
Yes, this slide is on RSP, right?
Yes.
More money having.
Yes.
Yes, good.
So there's also like side hustles, which many people may be involved with, and you're saving up money or investing money in those types of directions, right? And then there's homes too. So somebody may want to get a new home here in Canada, right? And then they go to their bank. And because you've worked really hard for like 2 years or 3 years that you've been living in Canada or living in the US, and you've saved up good money, right? You have your down payment of maybe 20K or 30K as down payment, and you want to buy a house of like 400K. And then the bank says to you, oh, with your excellent credit score, and then with all we've seen, you are approved for like a 400K loan. And you think, whoa, fantastic, I've seen this house I like, and the house is going to cost me 400K. You don't, like, what you want to keep in mind is if you have they've approved you for a certain amount, you don't want to use up all of that amount, right? So if you're approved for a 400K loan, because they've checked all your credit avenues, they've gotten your report from so many places based on your usage and your history, and then you think that it's okay to go get that 400K, that would be a mistake, right? Because the home ownership responsibility is beyond mortgage payment alone. Right? And then you don't want to stretch yourself to the limit where you're now working 2 jobs or 3 jobs and you're so exhausted, you don't even have time for other things, right? So taking that 400K limit may even taking that 400K and going to buy the whole for like a home that is 400K or maybe 401, right, is going to impact you, because there are things like your electricity bill, you have your property tax, depending on where you live, right? Some places in Canada, property tax may even range to like 6,000 in a year, and some places are costing like 3,000 for property tax. So you need to be aware of all the other money responsibilities that come with owning a home, right? So don't think that because you've worked hard to build that score, you now put yourself in a fix and then it starts to impact your score negatively, right? That's almost taking yourself back to, ground zero. And with that, I am getting to the end of the presentation here, and I can take questions. So if you have any questions at all, feel free to drop them in the chat, and I would be happy to answer them.
Thank you very much, Toyin. So I was expecting that people will put up their questions in the chat, but then if you have a question, you can just kindly unmute yourself and please ask.
So my name is Sam. I have a question.
Okay.
My question is about your bank pre-qualifying you for a credit, for a line of credit. What impact does that have on your credit score? Is it like a hard hit? Because I kind of read the fine print, and what they're saying is it is still subject to some terms, some conditions. So I just want to have an idea, if a bank pre-qualifies you for a line of credit, so what does that mean? Is that going to be a hard hit on your credit score, or what are the advantages of that? Or is this something one should just ignore and just pretend you never saw that? Thank you very much.
Thank you, Samuel. Great question. So let's look at this slide again, where we talk about how your credit is calculated, right? So your line of credit would also be like a revolving account, right? And then your bank, since it's a bank you already use, like whatever request, if they ask for an update on your credit behavior or like do a hit on your report, it's not a hard hit because it's already an agency, like a credit agency that has history on you, right? So if I bank with Scotia, with RBC, and then RBC decides that, oh, I've been very responsible with my credit, and then they give me line of credit for like 35K, that happened to me. And then the first time I saw it, I was like, these guys are trying to get me into trouble and I'm not going to answer. So I got offered like twice. And then I realized that actually refusing it does not make any sense, right? Because refusing it doesn't add up to like my credit limit, right? If I had a limit of like 2.5 on my credit card itself, and then I get a line of credit of like 10K or 15K, it's better to take it, because in the long run, like when you add both together, it's 2K plus 15K, which makes 17K. And then I'm spending maybe just like 1,000 on my credit. So 1,000 of 17K is way below my 10%, which we want to be at, right? So refusing it is not doing you any good. If you take it and you don't use it, that's fine, because it shows that you have a large amount at your disposal and you're not even using anything. You're still using a small percentage. So my advice to you will be, there's no harm in taking it, because I eventually took mine. If you don't need it, it's fine. You can keep it on your record and it doesn't impact you at all. And if you, and another thing to note is, if you ever need it, it's better to take a loan against your line of credit than against your credit card. Because here in Canada, if you go use your credit card and you're not able to pay in full, you have 22% interest, right? That is reading up against you. But on your line of credit, typically it's like 5%, 7%, 6%, which is amazing. Imagine if you had to do like home improvement, like you want to build a deck, you want to do something in your house, or you want to do your basement, and then you take out of that line of credit instead of your credit card. Like, there's no way you even want to take it out of your credit card, because you'll be paying an exorbitant amount of interest, right? So having the line of credit is always, always helpful. It's always a good idea to have it. As long as you're responsible, you trust that you won't go spend it irresponsibly, then it's always a good idea to take it. So if your bank, I see Esther A saying that they were offering me like the credit limit increase, please take the increase, right? Because it just shows that you're an amazing person. Take the increase, don't go blow it, because it's not dash money, it's not free money at all. So take the increase, but continue to do what you used to do before, right? Don't say, because I now have 20K limit, I can now start using like way more. As long as you continue the habits that helped you to get there, then you should be fine.
Sorry, before we continue, Toyin, please, can you mute everyone?
Oh, can I what?
Be able to mute everyone.
Okay, I'll try that on mine.
Yeah, thank you.
Okay. All right, I see a question here from Oseme that says, what advice do you have for people without any pension and no benefit from the government, or no CCB, but keep getting the banks chasing them with so much credit limits and some high credit lines? Very similar to the question I answered for Samuel. As long as, like, if the bank is chasing you, it's because the bank, and here they will offer you, like, you can even go into a store and they'll say, don't pay anything for 12 months. Don't even listen to them. What you want to do is continue to have your healthy credit habits, right? Like all those guys that will say, don't pay anything for 12 months. You want to read, like, ask more questions, right? If I'm not paying anything for 12 months, like, are you sure you're not putting anything on my account? Like, ask so many questions. Is it on the 12th month that I don't pay that it starts reading? Or, like, if you don't even have it, don't try to spend it, right? It's spend only what you know that you have, or you know that as soon as I'm walking out of this store, if, like, the worst case scenario, I'm able to clear on the 12th month when it starts to impact my score, I'm not going to be in a hitch, I'm going to be able to clear it, right? Because it's almost as though they're setting a trap for you. Who knows what's going to happen in 12 months, right? Maybe by the 12th month, God forbid, there's something happens, you're not able to come up with that money that quickly, then they start to get their interest, right? So if you don't have it, don't use it. That's pretty much the answer to that question. And I hope that okay, CCB is typically like child benefits. So if the person doesn't have a child, they won't be able to get CCB. And then if you have employment, you may not be getting any benefits per se from the government. So it's pretty much like salary, or your, like, if you're self-employed, your own income that you'll be using, right? Okay, any other questions?
Well, just comments. Somebody said good things are not cheap and cheap things are not good.
Agree.
And do we have any other questions and comments?
I see
I'm
someone
just-
joined from Rwanda. Sorry. That's nice.
Yes, Sam, you were going to say something?
Yes. I was going to ask another question, and part of the material we've been, that's encouraged to read is Dave Ramsey's book, The Total Money Makeover. And in that book, you will find out that Dave Ramsey is advocating for everyone not to use credit cards. And he's saying that there are ways that you can build your credit score without the use of credit cards. Now, what do you have to say to that? And can you shed more light on that procedure, or that, how to go about that here in Canada, that you don't have to own credit cards in order to build a credit score? I remember he was talking about using your landlord's reports, maybe utility bill, the constancy of your payments and all of that. So how does that work here in Canada? And is that something that we can apply, or is that something that can be explored? Thanks.
Yeah, so it's very possible that you will not need that credit card, right? And that's where this is just your personal situation, right? So what do you want to get out of building a credit score, right? What do you want to get out of it? Is it maybe 2 years from now, I want to be able to go to the bank and take a loan on a mortgage, right? I want to buy a house in 4 years from now. And if I'm using only my electric bills and I'm using, phone bills, internet, they see that my record is good. I'm always paying these guys back on time. Or maybe they pull the money from my account automatically, right? There's a standing order to take that money out of my account, and there's never been a day that I default on that, right? So that's very possible, because your credit, remember when I mentioned that your types of credit is not just credit cards, which is what many people are familiar with, and that's the revolving accounts, right? So you have other types, like your installment accounts, you have your open accounts, your electricity bills, right? And then you have your rent as well. So there's a void check that you've already given to your property manager or your landlord. So they don't even need to call you, but on a certain day, 950 Canadian dollars is taken out of your account for rent, right? And that's, you're always on time for that. You don't default at all. So those things will also count towards your score, right? But how quickly does it build up your score? So if you want to try that, like, for sure, totally try that and then see how your score improves. So it's about looking into the reports as well. Like, you have your banking application. If you're using RBC or Scotia or whatever, like different types of banking systems in the US, right? Look into those kind of reports. You can also send you can request from Equifax or TransUnion here in Canada. You can request for inquiries that are on your report, right? So they can actually give you a detailed report. And then you can look into it and see how well you're doing and if you're tracking towards your goal, right? So it all depends on what you're trying to get out of it. If you don't need it at all, you don't even, like, you think that you can come up with that money to even buy a house and you never need to go ask from your bank, then that's fine, right? Or you feel that if you use just your installment account and your open account, maybe after 5 years, you're at a score where you're comfortable with, and then you want to get a mortgage at that point, that's also fine, right? So honestly speaking, you don't have to carry that revolving account, which is your credit card, but ask, like, it's a personal question on what you want to do and achieve with your credit score.
Thank you very much, Toyin. I think somebody asked the same question. I think that answers it. Oseme said, what do you say about staying off credit? Completely. I think that answers it. And then Sandra says, what kind of investment or financial security can a mom create for a child? I worry if I am building a good financial foundation for my daughter.
Sandra, if you're in Canada, or I don't know if the US has RESP, they may have something similar. But in Canada, we have RESP, right? Which the government says, they match your, like, how much you put in. So your maximum, I think yearly is like 2K, and then they max it to the maximum of like 500, right? So if you put 2K in a year, they can add 500 on it every year. And then you can hold that account for your child. Okay, somebody said we have type 5 to 9 for kids in the UK. Oh, Sandra is in the UK. So I don't know what kind of options you have in the UK, but find out, read up if there's something similar to RESP that we have here in Canada, and take the maximum advantage of that, right? So make sure that if it's available and the government matches, there's any government matching program for kids education. If you take that money, like that money is specifically for education, right? So if you take that money out of RESP, then you're not doing your child any good, right? And then we also have CCB here in Canada, which depending on your income, they give you a certain amount. If you're a high earner, you may not get too much when it comes to CCB, and they look at the household income, right? So they don't look at the individual. As long as you're living together with your spouse, they look at the household income. So if somebody earns 500, if somebody earns annual income of like 100K, another person earns like 30K, it's combined of like 130, and they calculate that to give you your CCB. And then it also depends on how many people are in your household. So how many children do you have, right? So whatever is available to you, then make sure you take advantage of it. A lot of people get CCB here, and then they don't remember that, oh, I need to deposit something into RESP for my child so that it can keep growing till the child is like 18 and wants to go to the uni. So keep that in mind. If you're getting that kind of money, be depositing it for your child. And another thing is, if you want to leave a good foundation, try to find ways to increase your income as well. So try to find ways to become a high earner, or a side hustle, or an investment that will pay off in the long run, right? But please make sure you do your research so that you're not like losing money as well. There are Insandy bonds you can buy monthly for kids in the UK. Okay, I've never heard of that. That's good information right there. And then there's, Oseme says 500 standard, the additional 200 is for low income family. Okay. Some people don't even get 5, like they don't. Yeah, so 200 for. So if you're a high earner, like there are many things you don't get here in Canada, but it all depends on how much your household income is.
Okay. All right. Thank you very much. And thank you for sticking with the time also. This is 4:56. And so do we have any other question or comments? None. Okay, so in the absence of none, 56 in Canada. Solomon, okay. All right, so we can just, okay, somebody said, how can we get the recording? It's going to be saved and sent to the groups, and it's also going to be uploaded on YouTube, and I would send the link also to the YouTube link to the video. So thank you very much once again, Toyin. Thank you all for joining. And
I put up a slide here if anyone is trying to find me elsewhere.
Okay, yes, I was going to say that too. Yeah. So if you want to reach out to Toyin outside this session, our IG pages are Thriving as a Canadian Immigrant. And then she also has a podcast, Thriving as a Canadian Immigrant. And on LinkedIn, she's Toyin Fatubarin. All right. Would you mind? Thank you. Thanks. Would you mind making me the host back?
Sure.
All right. So I was just going to call Otumba Sam, if you don't mind, a vote of thanks. Sorry for putting you on the spot.
Okay. We're grateful for the presentation that you've so eloquently presented to us today. Toyin, we are so much indebted to the wealth of wisdom that you have, given to us without holding anything back. Thank you so much on behalf of every member of the Arimathians and the finance group of Covenant Nation, Diaspora. We are grateful and we say a big thank you to you. We hope that in the not too distant future, you will have something more fresh for us. And we're looking forward to engaging you again. Thank you very much, and God bless you.
Thank you, Otumba. And thank you to everybody for taking out the time to listen. I hope you were able to get very good tips out of it.
All right. Thank you very much, Toyin. And we'll chat afterwards.
All right. Thank you, Yomi. Thanks,
Thank
Tolu.
you,
Take care, everyone.
Toyin.
Okay,
Yeah,
bye-bye.
Thank you.
we can still stay.
Thank you so much,
I think
Tolu.
Toyin can leave, but then